Hey guys, welcome back to the channel Let's Make a Mill, where I'm basically documenting my journey towards making $1 million. And I do that by investing into real estate as well as investing into the stock market and investing into what is called REITs. That stands for Real Estate Investment Trusts. Today's video, I'm going to be doing a buy update on my M1 Finance portfolio as well as my Fundrise. It's been a while since I've last done a buy update. I think the last buy update I did was October 30th. So today is January 2nd, so Happy New Year to everyone who's watching this video, and Happy Holidays and Merry Christmas to everyone else. But, today I figure today would be a great time to give everybody a buy update. I did have a large buy update that was done in, I think, the middle of November, but I didn't do a video for it. I just, with the holidays and everything that's been going on, as well as closing on a triplex, that's been my main focus. And I've actually been kind of keeping cash liquid. Just to try and take advantage of anything that may have come of interest, as well as prepare for some large expenses that I have coming up, some of which I'm already taking care of. And this has to do with all my rental properties. But anyways, let's dive into today's buy update. This will be a buy update for January 2nd. Really, it should be January 1st, but we'll do January 2nd. So as of today in my M1 Finance portfolio, I have a total account size of $21,890. That's with a market gain of $983.12, with dividends of $368.70. So far, the return has been about 20%. So let's take a look. So we're going to go into my activity to see what we did on, I think it was November. Here we go. So on November 13th, I got a pretty substantial bonus from my job, and I wanted to put a lot of that money to work. So we'll take a look here real quick and see what I bought. So I really wanted to take care of the apartment REITs, or take advantage of the apartment REITs, the strip center REITs, as well as the triple net lease REITs. And I'll go over that here in a moment, but these were my buys. I'm just trying to put more money to work as much as possible. And then take advantage of shares that have dipped, and then just ride the recovery up. If I'm not riding the recovery until the positions recover, or the companies recover, or the stock recovers, whatever, I'm just going to be collecting dividends. So if we actually look at some of the dividends that I've been getting since, nothing substantial. And again, this portfolio is only 6 months old, so I believe in the next 2 years, 3 years, these numbers will be looking much, much better. But anyways, let's head back into the portfolio. So we're looking pretty good. And again, these are all real estate investment trusts that I'm buying into. So as you can see, triple net lease, apartment REITs, strip center REITs, storage REITs, manufactured housing, industrial, data center, and infrastructure and single family homes. So we'll take a look at the triple net lease real quick. I did a video on Store Capital and WPC, I believe. I was adding those two when I added those two positions, but they look like they're faring up pretty well. So it's just all good stuff. Let's go down here to apartments. Again, apartments, I'm very bullish on, only because as the economy, with the vaccine that's finally been released and, going out to the general population, people will eventually go back to work, or they are already working remotely. I believe, at least I'm bullish on apartments because everyone's going to need a place to live. EQR, AVB, CPT, and ESS. These are some of the bigger names in the space, and I really feel that their shares are really undervalued, because if we were to look at VNQ as a baseline, the real estate index still has not recovered since pre-pandemic levels. So the shares are still relatively cheap or undervalued, and I'm just going to keep buying more, as I have more capital to deploy. Strip center REITs, these were one of the hardest hit sectors, because they have a multitude of businesses that are tied to them that got shut down because they're not essential. But again, I'm pretty bullish on strip centers. FRT and Reg, they're some of the best in the industry. So I'm going to hold them for the long term, and all these positions I'm holding for the long term. It's going to be about maybe 3, 5, 10 year holds. Industrial and data center. So let's take a look at the data center REITs. These were performing extremely well um, post pandemic because everyone was staying at home. They're streaming. So all the streaming services got really, like influx of viewers and people who are buying subscription services and things like that. So these data center REITs and people playing games and streaming on Twitch and all that other stuff. So data center REITs did very well. Uh, in the beginning of the pandemic, in the middle of the pandemic, and then as things started opening back up, and the vaccine was starting to get deployed, and just the bigger macro things at play, the shares started to drop. But these are still very good companies like DLR and Cone. Or Digital Realty Trust and Cyrus One, these are still very fantastic companies. And again, even though the shares took a little bit of a dip, you know, I'm down $22 or 2.36%, but I'm bullish on these, and I know that they're going to be growing over the long term and, paying me a small little dividend. Same thing for the infrastructure REITs, cell towers, fiber, all that other stuff. Uh, I'm still pretty bullish on these two, and I believe that they're going to play out very well in the long term. So I'm just going to keep investing in these two. Even though they're down, I actually want to make some purchases of these two companies, but I just don't have any capital at the moment to deploy. And I'm hoping once I get paid this next paycheck, I should have some cash to throw around. It kind of all depends on a couple things because I have some, like I said, some large expenses coming up. Uh, let's take a quick look at the portfolio itself and see where we're at. Oh my God. Sorry if you guys can hear that. I'm right next to a window and they're doing some construction. So we can see my dividend yield for the entire portfolio is about 3.6%. I believe V&Q is at like 3.4%, though don't hold me to that. These are my target allocations for all my positions. Triple net lease obviously making up a quarter of the pie. Oh my God. Okay, I had to shut the window there. Hopefully that quiets that down. Um, Apartment REITs taking up a little bit more, and then going down the list. I do want to add, I may add a position in the future to cannabis REITs. There's one company in particular, but I won't mention it now just because I haven't decided yet. And I don't want anyone taking this as you should invest in these companies. This is just what I am doing. So I have 24 holdings, again, yielding a total portfolio yield of 3.6%. And I expect this dividend yield to grow over time as well as the shares. Again, if we're looking at the actual graph, it has not recovered since the pandemic occurred back in March. I'm pretty bullish, like I said, and I feel like they will eventually recover, and I'll be able to enjoy those capital gains as well as dividends until they reach pre-pandemic levels again. So, with all that said, let's hop into my Fundrise account and see what's going on there. All right, I just logged into my Fidelity account where I hold the Fidelity Zero Cost Total Market Index, which follows, I believe it's 2,500 companies. It's similar to like Vanguard's Total Stock Market Index, but this is Fidelity's version of it. They just don't include the small caps. Please ignore MAC, MO, PEI, and SPG. These are legacy positions. I might actually hold on to MAC and SPG. Only because these are mall REITs that have suffered due to the pandemic and then suffered because of the e-commerce wave that's happening, or the come up of e-commerce. But I'm pretty. I don't know. I might be. I think Mac and SPG will come out on top. PEI is in serious trouble, as you can see. I mean, I lost almost the entire investment. Whereas SPG, they're like one of the top 5 or 6 REITs in the entire index. Mac is they own grade A malls, so I feel like these two will come back. It may be a couple years. They have some serious headwinds ahead of them. But I think eventually they'll come back. But anyways, please ignore all these positions. FZROX is the one I want to talk about. I when I got paid back in November, I wanted to put some money into the market and get it working immediately. So we'll take a look. Currently, I have an account value of $16,872. The actual cash value, I'm sorry, that was the cash value. The current value with the capital gains of $2,732 is a total of $19,604. And that's with a 16.19% gain. So we'll take a look at my activities and orders. So like I said, back in November, like November 13th is when I made I got a sizable cash bonus, and I wanted to put a lot of that money to work. So I put $5,000 into the index, or into my account, and then I bought $5,046 of FZROX. And then I also got my dividend from them of $245, which got reinvested back into the index. So I just wanted to show you this real quick. FZROX is a total stock market index minus the small caps. I'm not sure why Fidelity did that. Um, I'm a firm believer in the U.S. economy, and I'm going to keep buying shares even if they're doing really well or even if they take a large dip. I can dollar cost average over the long term. I'm very bullish on the entire stock market as a whole. And if you've seen some of my other videos, the long term benefit will just kind of outweigh any of the short-term problems. So like when the pandemic happened, the S&P 500 dropped well over 30-40%, but has since recovered, and I believe it's sitting at like 3,700 and something points, versus the when the COVID pandemic started, or when the coronavirus pandemic started back in March. I think the S&P 500 dropped to like 2,450 points. So been a huge gain. But the account value was much higher, but I withdrew a lot of the cash. If you guys have been following my videos, I withdrew a lot of the cash. I had a cash value of like 75,000, but I withdrew a good amount of it because I wanted to use money to buy a 3-unit apartment building. But anyways, that does it for this section of the buy updates. I just want to show you guys that real quick. Again, I'm investing for the long term, and I treat FZROX as my core holding because it is the index for the total U.S. stock market minus the small caps. And I'm also treating it almost like my personal like savings account, because, and I mean, this could be a video in its whole self, but instead of having your money, say like $100 or $1,000, $500, whatever, say in a savings account that's yielding almost no interest, I can throw it into the market and I can start making money day one. And of course, if I go to sell it, I'll have to pay capital gains tax. But either way, I'm still like, the market is doing really well. And even if it drops, even if I lose money and I may not need it at that time, I'm just going to keep buying more, because I'll be able to reap those capital gains in the long term. So anyways, that's the buy update for this section. We're going to go ahead and move into Fundrise. Okay, I just logged into my Fundrise account, and we're going to start from the top. So the entire account is $26,438.92. The returns to date have been about $2,438.92. I've been an investor since June of 2018, and I'm in the long growth investment plan. The counter has started. So for 2021 so far, I've made $3.35. Nothing extravagant, but as time goes on, I know these numbers will improve. I paid 12 cents in advisory fees. All time, I have made $877 in dividends, as well as close to $1,600 in appreciation on the assets. And I've paid a total of $28 in advisory fees, which gives me a total of $2,438.92. So we're going to take a quick look at the transaction. Same thing with my M1 finance portfolio. Back in November 13th, I think 13th, 14th, I had a huge bonus that came my way from my job, so I decided to put that money to work. I put in $2,100 into Fundrise. Here's the complete order. Order completed on the 19th. Um, and it's just real estate is a long-term game, so I don't expect anything drastic to change with Fundrise, at least not for at least another couple of years. 2020 was a pretty trying year for everybody, including the real estate sector. I don't think there's any sector, stock, equity, real estate, REIT, that wasn't affected. Several people lost jobs, businesses shut down, whole economies got shut down. The landscape has changed quite a bit. And it seems like tech just took off to the moon. Crypto's doing really well. So, you know, 2020 was just a very interesting year. And I mean, I'm still relatively a brand new investor. I've only been professional, well, not even professionally, more like I've been taking investing seriously only in the last 2 years. So it's been pretty interesting to say the least. Let's take a quick look at the performance so far of the Fundrise portfolio. So as you can see, these numbers, this is what I want to see. So if we look at previous years, in 2018, I only had 3.7%. Well, that's because I invested in June of 2018, right? So I wasn't going to see anything extravagant. 2019, I saw a 7% return. 2020, 8.8. So 2021, hopefully it'll be a little higher, maybe like 9 point something, maybe 10%. Waiting to see what happens. But this is the growth that I want to see. I want to see this go up. So, I'm very happy with my Fundrise account. I'm very happy with Fundrise in general. Again, they are investing into Fundrise. They're investing into illiquid assets such as real estate. Real estate is a liquid. Okay, you can't trade a house or an apartment building on the stock exchange. You can't buy it and sell out of it the next day. I mean, you could, but not traditionally. Anyways, here's just some numbers for those that may be interested. You probably pause the video and kind of take a look. Again, this is nothing extravagant. My total cash investment into the portfolio so far has been $24,000. So I'm hoping to get this much higher in the coming months. Hopefully by the end of this year, I should have, if everything goes well, between $40,000 and $50,000 in the account. So going back to Fundrise, and again, my plan for Fundrise is to invest for the long term. 5 years at a minimum, definitely longer if I wanted to, because real estate, they have some very impressive returns. It's good against inflation. Real estate is a hedge against inflation. I can collect appreciation or dividends and appreciation, throughout the remainder of my investment. Fundrise is by investing into real estate and investing in a Fundrise, your money's going to be tied up. So just know that you have to measure real estate in terms of like years, not days, weeks, or months, to get a better view of your performance. So again, I'm very happy with my Fundrise account. I'm very happy with Fundrise and the direction that they're heading in. So I'm going to just keep investing with them. So that's pretty much it for my buy updates. If you guys have anything for me, please let me know down below in the comments. Like, subscribe, or dislike the video. Just let me know what you think. So without further ado, appreciate you guys watching. Stay safe out there, and Happy New Year.